All right, we're live here at Intersekt Festival in Melbourne on 11:37 on day 2. We're joined by Ruth Hatherley from Stryd. Ruth, how's Intersekt been for you so far?
It's been great. I did put a post on LinkedIn this morning that I haven't taken any photos because I've been involved in so many conversations. So I think that's probably the right level of attention.
It's kind of like that, isn't it? And then you get you start having a conversation with someone and someone else goes, "Hi," and you're like, "Oh, sorry, I'll be back. So there's like a whole lot of pending conversations happening, and then they happen later on.
Yeah. My observation for Intersekt now is that all the people that you want to speak to are all in one room, and it's making sure that you get through all of them over the 48 hours that you're here.
Yeah. Is your first Intersekt?
No. My very first Intersekt I came to was when they had it down at Federation Square. I think that was even pre-COVID. So I've been to a few now.
I've only been the ones here. I think this is 3 years in a row. Good connections. How have you found it so far in regards to making connections and why you're here?
Yeah, I think for me, what's been really pleasing, our product really focuses around open banking and the CDR legislation. And we have been waiting with bated breath on the direction the government was going to go with that since the reset last year. And being involved in the Open Banking Roundtable on Tuesday and then hearing the Minister speak in the opening address, it's given me a lot of comfort around the direction of the digital economy and how they see CDR and fintech at the core of that reform to be improved productivity in the country.
Excellent. Now, Stryd, let's talk it. What is it? Explain it on a whiteboard.
Mm-hmm.
And for the listeners out there that have never heard of it, the elevator pitch.
Yes. So Stryd is the best-in-class retention tool for the mortgage sector in this country. We are able to get all of the product and pricing information via the CDR APIs from all of the lenders in the market. And I'm
guessing like 50 plus maybe?
It's 105 actually.
100 plus?
Yeah.
100 plus lenders?
There are 105 regulated lenders in the country in the banking sector, and then in July there'll be over 100 more coming live in the non-bank lending sector. So we'll have over 200 lender products and around 5,000 pricing permutations of those products for comparison for people that originate home loans.
Wow. Okay. So every lender has their different rates and different products and fixed and variable and investment loans and green loans, etc. And you capture all of this?
Yes.
For the mortgage brokers to provide the best or most suitable product for the client?
We primarily sell it to the mortgage broker and aggregation market at the moment, but it actually is relevant for any origination channel where product comparison is done for home loans. So it can be mortgage brokers and aggregators, but it can also be third-party technology platforms and comparison websites where consumers want to make a decision about whether they're at the most competitive rate in the market.
Right. So you're B2B, but you can also be B2B to C. Yeah, right. Okay.
Yeah.
And that's just with mortgage products.
Mm-hmm.
Is there an opportunity somewhere else for other comparable things?
100%. So because we've built one of the only product repos in the country using the CDR data, we now have a very intimate understanding of how the product reference data works. We work with the ACCC on reporting the quality of that data, but we also know how to turn that data into reliable and accurate data for product comparison. It means that we can follow the CDR legislation as it rolls out to the other industry sectors into energy, telco, and wherever it goes after that.
Yeah, CDR, right. We've been floating around talking about open banking for a few years now, and there's use cases and storytelling around use cases. But for me, as an observer, I think the energy sector's been using it quite the most so far, do you think? Is that kind of where, it's made for, sort of wasn't made for anything, but the banking was kind of one of the use cases. Are we seeing a bit more adoption?
I would say that the energy sector had the most obvious use case where people could compare and change and where people think that they're going to make a change to their cost of living or their affordability in their household. But what I would argue is that the mortgage use case is more powerful. For those that have mortgages, we can often find that they can save thousands of dollars a year on interest by switching from one product to another. When you typically compare energy products, you're saving hundreds of dollars a year, not thousands.
Yeah, so you're probably doing, maybe $10 to $20 a month or something.
That's right, as opposed to $10,000 a year.
Yeah, so you might be $800 a month because you kind of don't know what your mortgage rate is.
That's right.
Do you reckon if you asked the person on the street what their rate of mortgage, they would know?
They'll say a rate, but often they don't know that that's correct. So often what they might know is the rate that they got when it's settled. But what they're unaware of is how that rate moves over time. What they're also unaware of is that when an RBA movement happens, sometimes that rate discount isn't applied to an existing loan and it's only applied to new business. And that's why our product is so important, because we will look at new business rate lending and we will compare that to the existing rate that customer has.
Yeah, wow. Now, I don't know exactly what my rate was, but when I changed careers in May of 2022, I had 14 consecutive interest rate rises. So I was aware of that.
Yeah, they're pretty good at applying them when it goes up and not so good at when they go down.
In full credit, there's a few have come down recently, so
true.
maybe we are looking at that. So from a feedback and product point of view, where are you? What do you do with that feedback, and how do you kind of relay that with what you're thinking where your business should go?
Yeah, so we run kind of 3 models. One is just an insights model. So we take the comparable data on a daily basis and we create alerts of the insights to our users around whether those customers are at risk and what's the priority of that risk. So the higher the delta of the interest rate difference, the higher the savings to the customer, the higher the priority of that customer to our user. Our user then chooses what to do with that customer because they are the expert. They're the superhero with the consumer. They hold the relationship with the consumer. We then have a service where we provide insights on bank movements to third-party sources like media outlets or other organisations that want to see what's moving in the market independently and they don't want to pay the banks for that information. And the third kind of service we have is a white glove, sort of all done for you retention as a service, where we not only will create the insights for you, we'll then speak to the consumer and get their consent to share their CDR data of their existing home loan. We'll help them with the communication of what to do with that loan. So they'll either do an email or an SMS or some kind of outreach. And we are retention as a service for that particular customer.
Interesting. And the whole mortgage process, have you looked at it holistically and gone, there's some ways we can improve it, they can improve it, the banks can improve it, and then kind of going, being an advocate maybe?
So the history of MoneyCatcher, the reason why I started the company earlier in the pre-COVID days was that I wanted to do digital mortgages end to end to solve the problem of people in this country having 42 days to get from application to settlement into their home. We actually built a digital loan origination platform and we had we're in KPMG accelerator programs and that was the problem I did want to solve. What I found was in that era, the solution that we had, the market has the problem. The market identified that they wanted to solve the problem. The market didn't want to pay and prioritise the solution for that problem. And so we really pivoted as an organisation and focused on what was the problem that was going to be out of the other side of COVID that no one had a solution for. And so we then said, if the broker market share is going to grow over this time, which it did, and it grew more...
So like 70%, I think.
76% is the latest stat. If you speak to the mortgage market, if you speak to the banking market, it's more like 65. It's big.
Yes. Yeah. Over 50%, yeah.
Yeah, and it's grown,
and it had the Royal Commission thing in 18 as well in terms of that, and that's like a bit more... It was a bit crazy there in terms of the originations, but now it's more, streamlined. But it's more accepted, I suppose. Now people go, oh, a mortgage broker about 10 years ago, you're like, oh, I might use one of them. Now it's like, well, you use a mortgage broker because you're trying to get the best deal, right?
That's right. You're trying to get the best deal, but also the whole process of buying a property or getting a home loan is incredibly stressful and complicated for people that don't get involved in that on a day-to-day basis. And so while we can digitize a lot of that process, the broker has the beautiful human element of where they can be the expert and the superhero for the customer through that process. Banks and lenders just haven't quite got that bit right. And so that's where the broker industry is winning in that process. The average time of a loan consultant is about 7 or 8 months in their role in a bank. The average time of a broker in their business is 7 to 8 years.
Yeah, right.
And so they're experts in that one vertical.
Yep.
And so what we decided to do is build a solution that helped them retain those customers. But that solution could also identify risk inside any loan book, whether that be at a bank or an aggregator or any third-party distribution channel.
Right. You're calling the mortgage broker the superhero. You're powering the superhero, right?
That's right. We're the cape.
You're the cape. Yeah, there you go. You're the cape for the superhero. That's awesome. And in terms of AI, like it's a buzzword,
Yeah,
but there's lots of things going on with AI, a lot of talk, a lot of funding in the segment. You could be something.ai and probably get some money at the moment, but that's no good. But are you looking at it? What are you doing? How are you thinking about it?
Yeah, so we do have it in our business. And so our approach to it is we handle some pretty sensitive data. And we want to make sure that the solution that we choose to embed into our product is trusted, verified, and can be held to the same level of best practice as what our technology is at the moment. We run it internally. So we use it on how do we test and iterate and almost challenge and outdo ourselves inside our own organisation. And we have it on our roadmap of additional features around how we would create additional insights for retention risk inside our product. So we definitely have it on our roadmap. We are looking at it. We're not deploying it in our product at the moment. We don't feel like we've got enough comfort around that. And until we do, we are using it internally. And, we're going to be the test bunnies inside our organisation.
Yeah, no, I like that.
And then we'll figure out when it's trusted and ready to be deployed.
Trusted and ready to be deployed. So for the listeners out there that are mortgage brokers or want to start a mortgage broking business, they contact you, right?
Mm-hmm.
And they get their cape to be the superhero for the person to give them their dream home or refinance or renovation loans or whatever it might be. Refinancing as well?
Yeah, so we let them know whether the customer could be on a better deal either within their own loan or their own lender, or whether there are other offers in the market that have better pricing. So we don't advise the broker on which way to go. We're not the expert in that.
You're just providing the cape, right?
Yeah.
And then in terms of like people just ringing up their bank and asking for a reduction, do many people do that, and does it happen?
I think it does happen. I wouldn't say it doesn't happen. I think that it doesn't happen. What do we say? The loyalty tax is quite rife in the market.
Yeah.
And so I'd say people do it, but I would suggest more people go back to their broker. But I would still say that that's not the majority of the cases.
Yeah.
Many of the customers the consumers that we've spoken to in our Stryd Done For You process, aren't even aware that the broker would be reviewing their home loan on an annual basis. And so home loans can often be set and forget, and it is the proactive broker that actually gets ahead of the rest of the market and builds that loyalty and trust with the customer when they want to compare their home loan.
No, I wouldn't know that either. And some people mightn't have heard from their mortgage broker since they got the loan.
That's very true.
There you go. Now, you're providing all the data, the back end to help the mortgage broker, help the consumer. If we do this chat next year at Intersekt 26, might be here in Melbourne, don't know, maybe in this room, what would you like to see for Stryd the next 12 months?
With our pathway of integrations and pipeline of sales, we should be on track to be able to have Stryd available for over 50% of the broker markets. There's 22,000 brokers in the market now. The integrations that we're doing at the aggregator level and also the CRM level should result in Stryd being available direct inside CRMs for over 11,000 brokers in the market. You can also buy Stryd as an individual broker, and it's not on an integrated level. So I would expect that Stryd should be available and active for half of the market by this time next year.
Excellent, Ruth. Thank you for coming and having a chat here at Intersekt, and look forward to supporting and helping where I can.
Thanks very much.